morning to all traders and welcome to another daily market size video provided to you by Orbex. Today is Wednesday the 24th of July and we're going to talk about gold and oil. There is a lot of things that actually we have to factor in when we're looking at gold. But at the moment, we've had a report by a media channel that Robert Lighthizer, the US representative, they are preparing to travel to China to reinitiate negotiations with the Chinese to finally come to a trade resolution. And they plan to do that before the FOMC meeting on the 31st, okay? So they don't want dollar to start falling, as you probably realize. Right now, dollar on the other side, it was a little bit supported because of, in the short term, because there was a deal between White House and Democrats for the increase in budgetary conditions in the US, but that actually didn't really do much to the market. The dollar moved higher yesterday because of the trade truce sentiment, plus because of some better than expected housing data. Now, the thing is that the Fed is expected to cut, so gold is still expected to move higher in the medium term, okay? Because at the same time, the ECB is most likely to be, as well, dovish on Thursday. And, in the longer term, the interest rates are likely to remain low nevertheless. So gold is going to be supported in the medium and shorter and the longer term. Now, the thing is that we've also got all these geopolitical tensions around the Strait of Hormuz between Iran, US, UK, the Emirates. So the situation for gold is a little bit easy to actually validate that from the fundamentals point of view and politics point of view is going to move higher. Okay, now since we talked about oil, the oil also moved higher yesterday because the API report, it was the best for 2019. The inventories actually were cut down as much as we have seen for 2019, and that has helped the oil prices to move higher. The thing is that there is fears of an oil glut because the Libyan war is finishing, okay? And the situation now in the oil, around oil is a little bit different, okay? It's not as clear, the picture, as a picture that we have in gold, for example. So I'm still expecting for oil in the shorter, medium and longer term to move a little bit lower. Now, I want to start with gold. It moves exactly as we expected, with wave 5 ended here and we're expecting an ABC correction. That could be an expanded with B wave here, or that could be wave 5 here, and we still expect an ABC. And nevertheless, in the shorter term, we're looking a little bit bearish from a technical perspective. After breaking this triangle pattern, created a throwback. Now, most likely the case is that we're going to see prices breaking below that low, below this trend line, correcting down to 1360, 1345, or even a tiny bit lower. We can even go actually to this low of the trend line and then move all the way up. Now, the thing is that from a political and monetary perspective, I don't see this happening because there's no time to act, okay? If we have ECB becoming dovish, then the FOMC, Fed cutting, we're going to move up higher sooner than expected. Okay, so I would be a little bit cautious, although on the technicals, I'm expecting this to be an APC impulsive move, which is likely to move to take prices lower. We could see this move become a little bit more short-lived, coming down to just below the 14 level and then moving all the way up. But we are bullish nevertheless. On the oil, on the daily, we are, I'm expecting okay, this is A, this is B, and I'm expecting wave C. In the longer term, I expect this to happen within a 1, 2, 3, 4, 5 move. Now, we've had this correction to the 61.8 Fibonacci retracement of that move, so looking pretty good. This looks like quite impulsive as well, so this could be the first wave to the downside. 1, 2, 3, 4, 5. We need to break below the 50 to really confirm the bearish trend in the longer term. Now, on the 4-hour, as you can see, We've had this move to the downside with it's wave 1, then we have this move to the upside, this is wave 2. I was expecting this, to be honest, to be a double combo, but that didn't happen, and it's okay because we stopped at the 61.8 Fibonacci retracement and reversed. I was expecting prices to move actually a little bit higher up to this trend line, but we missed it for a few cents. Nothing changes because we're looking quite impulsive on the downside. Wave 3, I'm expecting 4 and then 5. In the shorter term, of course, if we go down on the 1 hour, now that could be wave 1, wave 2, wave 3, wave 4, wave 5, and we are, that's the A, B, C correction. And then we'll go for the second one, which could be an A, B, C. But I see this as a 1, 2, 3, 4, and 5, to be honest. In the shorter term, of course, that could be 1, 2, 3, 4, 4 and 5, and then we're looking for another correction in prices to move lower. Now, regardless of how markets will move, what is important to notice is that we are now in a corrective move. We have just completed, it looks like we have just completed up here the combo pattern, okay, and we have actually rejected bulls up here. Now, the question is, are we going to move higher? It could be possible. I mean, we've moved a bit lower. If the area comes out good, we can move all the way up here, but I don't see prices really crossing above that trend line, okay? This is likely the 50 Fibonacci, the highest level going to see for the current market, and then we're looking at, of course, the break below that level and moving lower to 54.50, and then 52, near 52, and potentially lower levels as well. So I want to thank you for watching for another day, and as always want to remind you to visit our blog, is where we'll cover the latest news, provide trading ideas and all the necessary tools traders need.